Top 10 reasons for the US dollar's uncertain future value and the Federal Reserve's dilemma. For most of the last century, the preeminent role of the US dollar in the global economy has been supported by the size and strength of the US economy, its stability and openness to trade and capital flows, and strong property rights and the rule of law. As a result, the depth and liquidity of US financial markets is unmatched, and there is a large supply of extremely safe dollar-denominated assets. This note reviews the use of the dollar in international reserves, as a currency anchor, and in transactions. Before we start the video, make sure to subscribe to our channel and hit the bell icon for upcoming updates. Let's start the video. Number 1. U.S. share of world GDP versus U.S. dollar share of international reserves. A key function of a currency is as a store of value, which can be saved and retrieved in the future without a significant loss of purchasing power. One measure of confidence in a currency as a store of value is its usage in official foreign exchange reserves. The dollar comprised 60% of globally disclosed official foreign reserves in 2021. This share has declined from 71% of reserves in 2000, but still far surpassed all other currencies, including the euro, 21%, Japanese yen, 6%, British pound, 5%, and the Chinese renminbi, 2%. Moreover, the decline in the US dollar share has been taken up by a wide range of other currencies, rather than by a single other currency. Number 2. Foreign exchange reserves. The bulk of these official dollar reserves are held in the form of US Treasury securities, which are in high demand by both official and private foreign investors. As of the end of the first quarter of 2021, $7.0 trillion, or 33% of marketable Treasury securities outstanding, were held by foreign investors, both official and private. See Figure 3a. While 42% were held by private domestic investors and 25% by the Federal Reserve System. Although the share of treasuries held by foreign investors has declined from almost 50% in 2015, the current foreign share of treasury holdings is comparable to the share of euro area government debt held by investors outside of the euro area, and higher than the foreign-held shares of British or Japanese government debt. Number 3. Foreign holdings of government debt. Foreign investors also hold substantial amounts of paper banknotes. As shown in Figure 4, the value of US dollar banknotes held abroad has increased over the past 2 decades, both on an absolute basis and as a fraction of banknotes outstanding. Federal Reserve Board staff estimate that over $950 billion in US dollar banknotes were held by foreigners at the end of the first quarter of 2021, roughly half of total US dollar banknotes outstanding. Number 4. Foreign holdings of US dollar banknotes. Additionally, many foreign countries leverage the effectiveness of the US dollar as a store of value by limiting the movements of their currencies with respect to the US dollar. In other words, using it as an anchor currency. Ilzetsky, Reinhardt, and Rogoff, 2020, highlight that the dollar's usage as an anchor currency has increased over the past 2 decades. They estimate that 50% of world GDP in 2015 was produced in countries whose money is anchored to the US dollar, not counting the United States itself. Number 5. Share of export invoicing. In part because of its dominant role as a medium of exchange, the US dollar is also the dominant currency in international banking. As shown in Figure 6, about 60% of international and foreign currency liabilities, primarily deposits, and claims, primarily loans, are denominated in US dollars. This share has remained relatively stable since 2000 and is well above that of the euro, about 20%. Number 6. Share of international and foreign currency banking claims and liabilities. With dollar financing in particularly high demand during times of crisis, foreign financial institutions may face difficulties in obtaining dollar funding. In response, the Federal Reserve has introduced 2 programs to ease crisis-induced strains in international dollar funding markets, thus mitigating the effects of strains on the supply of credit to domestic and foreign firms and households. To ensure that dollar financing remained available during the 2008 to 2009 financial crisis. Number 7. Central bank swap lines. Issuance of foreign currency debt. debt issued by firms in a currency other than that of their home country, is also dominated by the US dollar. The percentage of foreign currency debt denominated in US dollars has remained around 60% since 2010, as seen in Figure 8. This puts the dollar well ahead of the euro, whose share is 23%. Federal Reserve swap line provisions to the Bank of England, Bank of Japan, and other central are at or near zero prior to September 2008. Provisions to the Swiss National Bank are at or near zero prior to March 2008. Provisions for the Swiss National Bank and Bank of England are at or near zero after June 2009. Number 8. Share of foreign currency debt issuance. The many sources of demand for US dollars are also reflected in the high US dollar share of foreign exchange (FX) transactions. The most recent triennial central bank survey for 2019 from the Bank for International Settlements indicated that the US dollar was bought or sold in about 88% of global FX transactions in April 2019. This share has remained stable over the past 20 years. In contrast, the euro was bought or sold in 32% of FX transactions, a decline from its peak of 39% in 2010-8. Number 9. Share of over-the-counter foreign exchange transactions. A review of the use of the dollar globally over the last 2 decades suggests a dominant and relatively stable role. To illustrate this stability, we construct an aggregate index of international currency usage. This index is computed as the weighted average of 5 measures of currency usage for which time series data are available: official currency reserves, FX transaction volume, foreign currency debt instruments outstanding cross-border deposits, and cross-border loans. The dollar index level has remained stable at a value of about 75 since the global financial crisis in 2008, well ahead of all other currencies. Number 10. Index of international currency usage. Near-term challenges to the US dollar's dominance appear limited. In modern history, there has been only one instance of a predominant currency switching: the replacement of the British pound with the dollar. The dollar rose to prominence after the financial crisis associated with World War I, then solidified its international role after the Bretton Woods Agreement in 1944, TUS 2021, Eichen Green and Flandreau 2008, Carter 2029. However, over a longer horizon, there is more risk of a challenge to the dollar's international status, and some recent developments have the potential to boost the international usage of other currencies. How did you like the video? Do you like it? Leave your valuable comments in the comments section below, and don't forget to like, share, and subscribe to our channel on YouTube.